As the winds of change sweep through the market at the moment, we find following the money is a great clue to helping us keep on the right side of the market. Hi, my name is Richard Lee. I manage the Stockradar.com.au website for you. We focus on catching breakouts, trends with a high conviction approach, managed carefully by our risk management strategy. Money flows has always been a sound premise to follow to help keep you on the right side of the market, and our reading of price and volume is the basis for this. With a dearth of stock picks currently, and we've had our wings clipped over recent months with many potential trends failing, but amongst it all, the strategy of trend following has kept us on some good trends in sectors like energy and utilities, which take up more than 20% of our current stock picks. So that's a good money flow in that sort of section. We're now seeing some potential flows towards other sectors as the price action directs us. In trading tactics, we look at how price analysis helps us understand and benefit from these money flows. Money talks, it drives us and makes us do things, some good, some bad. Okay, so let's get to the markets and have a look and see what's going on here at the moment. First, I'm going to talk a little bit about them following the money today. It's in our trading tactics thing, be it right or wrong, it very much helps you keep on the right side of the market. So that's an idea, and that's what we're going to go through today. So quickly, let's get to the markets and talk about the Dow Jones. Again, there's not a lot to argue about here. You've got a downtrend of lower highs and lower lows. It's below the average. The volume is high and momentum is weak. It's not really an argument at this stage. If you're trying to pick a bottom, now is not the time to pick a bottom. Okay, so this trend is certainly down the Dow Jones. And we have no reason to change that view. As with the Nasdaq, although it's hit 50%, we're still struggling. We've got some very, very heavy selling down through here. So it is a situation of lower highs, lower lows, below the average, high volume, momentum weak, almost a maximum trend intensity reading of -10. So that's what the overseas markets look like at this stage. If we go to commodities, gold is really still fluffing about within that range. We're not getting a lot from there. Copper, a bit similar, although it is bouncing off the low of this trading range okay at the moment. But still, we need to see it through here before we get any confidence at all this is going to go higher. For now, at the moment, we've got indifferent volume. We've got neutral momentum, so there's really nothing there for us to go on from our point of view. The other one is Brent crude. Now, this is a little bit different. This one is starting to nudge the top end of its recent trading range at R1 here. So it's now trading up around 123.58. So it's trying the upside now. This has been quite good, these patterns here. Lots of long, low candles of support here. Apart from this initial volatility, the markets look pretty good. Volume has been a little bit indifferent, momentum is still strong, and it's above the average. So still biased towards the upside quite heavily, and with this new break here, then we may well see higher prices into that top range at R2, which is a long-term high as we've seen before. So that's still looking pretty good. Okay, the XJO itself, or the ASX 200 I should call it, still in its range between 7,000 and 7,630. It bounced off the lows, it's now come back a bit yesterday, and we're down a bit more today, so 7,000 is certainly getting a good workout, and momentum is flat at this stage. So we're just going to wait to see if we get a resolution to this pattern here, whether it's going to break down or not at the moment. There's been a few changes. The banks are starting to look a bit different. There's a few negatives in the market starting to put pressure on this, whereas the banks have been levitating pretty well of late. They're now maybe pulling their support a little bit. ANZ, Westpac, even Bendigo Bank, which we looked at last week, failed pretty badly, is coming back again. So the interest rate rise there hasn't been nice to those banks. Okay, so let's get into some stocks today. Okay, now that's firstly what we looked at was, we did look at a few last week. We looked at Atlas Arteria, which has gone gangbusters for us. We looked at some of the transport stocks. We get to see AZJ levitating a little bit through it. I'm going to look at a couple of other stocks today, including Woolworths, just to see how things have changed a little bit at the moment. So first off, we're going to go to Santos. At last, we're getting some sort of push to the upside, finally, heading towards this R1 level up around $9. It's looking pretty good. The volume, as I said to you, I think it was last week, or maybe the week before, everything is green. It's above the average, the volume is good, the momentum is good. It just was a very, very slow price, but it's now kicked higher again, and it's going to hit R1, and if it gets through R1, that's even better. Trend intensity rating of 10. Okay, the other one in this energy sector which we've been following, there's a few there we've been following. Viva Energy has also done well. It's simply made a new high here, and that's really all you need to know here. It's made a new high. We had a prevailing uptrend anyway here. This is just confirmation of the demand. We've seen some reasonably steady volume through here. Momentum's good, and it's above the average. Trend intensity rating is 10. Registering a new high in price is confirmation of positive sentiment. This whole sector is still moving by the look of it. So Santos and Viva Energy are both looking very good. Now I want to take a look at a couple of stocks which are perhaps not so friendly at the moment, but I just want to talk a little bit about them. It's a bit about price analysis and money flows and things like that. Now I've looked at CSR for a while, and it's actually since about mid-2020, it's been a nice uptrend here. In fact, even this pattern here we were getting this higher low scenario with resistance here, which is inevitably a bullish pattern. It never resolved itself. Our last exit was up here around about 570, 580. We didn't take any buys here because it didn't go through. It has since collapsed pretty badly. And when we look at this, it's gone through this support, bad volume and bad momentum. This is a stock you don't want to touch, okay? It's changed its mind very significantly here, and we don't want to touch this stock. Now I'm going to go look at another stock which has been a long-term, people have liked this because it's been a steady, stable stock, but over the last couple of years it hasn't been so much like that. So we had this beautiful uptrend here. It then went into a big distribution pattern, and we've seen quite a lot of these patterns on the market at the moment, and some stocks like CSR have fallen through. So we're now getting this selling here. Then we're getting these lower highs here, and it's really putting pressure on this. So we're getting all this negative money flows here, and you can see all the money flowing out here as it breaks support and it just slams down. Now this stock has gone from $35 to about $17. That's not an insignificant move down, and we don't like to see those sorts of moves down, or we don't want to be involved in those sorts of moves. So when you see these things break, don't be brave, just let it go and stay aside. Now if I look at Fisher & Paykel, we see this huge distribution pattern which occurs at tops of markets. We've now completed that, and we're going now to the downtrend cycle, then we'll go to the accumulation, then we'll go to the uptrend cycle. Not yet. One other stock I want to have a look at, which we did look at last week, and it was testing those lows, but if you look at that pattern there, we've got a very similar pattern here on Woolworths. We've got a long uptrend, we get this big distribution pattern, then we get this series of lower highs, which is what we saw on FP and Fisher & Paykel here. If we just go back to have a look at that, you can see this series of lower highs here before it fell down, and see Woolworths is also doing a similar sort of pattern, putting pressure on this S1. Now we don't really want to see S1 go. If it does, it's not a good look for Woolworths. We've got the lower high scenario, we've got the below the average. Volume is starting to pick up nervously, and momentum has just turned around and dived again. So Woolworths is not looking that fantastic at the moment, and some of these consumer staples stocks have come back. I see Metcash has come back a bit, Coles has retreated from its highs, and there's a lot of those stocks in there that aren't looking so good in that sector. So we've got 3 stocks in there that we still hold in that sector. We're watching those pretty carefully at the moment. So just keep an eye on Woolworths because it is a bit of a concern. So some of these stocks like CSR, Fisher & Paykel, Woolworths, or even JB Hi-Fi, if we have a look at this one now, we've got this big pattern at the top here, which is really telling you there's a lot of sellers here. We tried to break up here, we didn't, we got through, we took the break, we got stopped out pretty quickly as it went straight back, and yesterday was a pretty bad day. I don't know what it's done today, but it's fallen off its perch and it's testing that low down there, which we do not want to see fail, as we saw with CSR and FPH, maybe worse, maybe JB Hi-Fi. So they're just things we want to concern ourselves. I don't want to be involved in stocks that collapse, because that's a big thing to come back from. Okay, so I want to make sure I get out of those stocks, turn neutral and move on, even if it means taking a small loss. That's what I will do, okay, because recovering from big losses is very, very hard. Okay, so that's those stocks there. So just be a bit careful of the market. The market is bad at the moment. There are a lot of bad stocks, a lot going down, a lot of consumer discretionary stocks, not just coming off a little bit, but being caned. Okay, and you don't want to be there. Okay, now, as we talk about consumer staple stocks, there is one stock that I'm going to look at, and this is probably a long-term view, Treasury Wine Estates, which I've been quite keen on for a while, once it's hit the bottom there, but it's just rotating around this low here at $8. up to about $13 at the moment. So it's trading in that range here, but we're getting a trend reversal structure here where we've got a low, we have a rally, then we have a similar low, then we have a rally. It didn't break through here. If we did, it would have been a trend reversal. It didn't. It's come back, created a higher low again, and now we're moving up higher. We haven't moved through. We're nowhere near this yet, but this is certainly worth watching as far as I can see, because it is a top, a downtrend, a bottom, and then we look for an uptrend. So the cycle, we're in the right cycle spot at the moment, but there's not a lot on the price. If I look at the volume's disinterested. If I look at momentum, it's neutral. And that's what typically will happen as we move into this sort of area. As people are very undecided, it's a battle of buyers and sellers going on all the time, trying to decide what they're going to do, who's going to come out on top, who's going to dominate. Eventually one will, and at the moment the buyers are starting to, but we need confirmation to this level to go before we actually look for an uptrend in Treasury United States. But that's one to look for. It's a bit of a longer term turnaround story. They made a bit of a muck up a while ago by being too focused. They're diversifying a bit better now and trying to make a bit of a future for the stock, which is certainly the market's starting to warm to it at the moment. Okay, so other stocks I want to go through, mineral resources, which I've shown you many, many times. What I've done this week is I've just cleared everything off this chart. I removed everything, and we're going to start all over again. Just a bit of a review. Now, we know we had all these beautiful uptrends here, up to $65. We've got lots of money in the bank there. But now we've gone into this pattern here. Let me just get rid of this ellipse for a second. What we've got here is we've got the highs up here at 65, 62, okay? Now this has been a very volatile pattern, $65 down to 35. That's a $30 move. That's not insignificant. So it's a volatile stock. It's rallied up here. It's come back again. It's rallied. It's come back again. Each time it's making a higher low. So if I look at this whole pattern in entirety, this is really one big reversal pattern where we've got the buyers increasing the limits here, the sellers just sitting there. Now, it's not a resolution until it's resolved, so don't anticipate, but a break above here would certainly suggest this is off again. A failure here, maybe we'll come back. But at the moment, what we're seeing here is we saw some pretty big swings in the money flows as this has happened as well. So at this big downward move here, we saw a lot of sellers getting out of the market, and the buyers started to get confident again, and they started moving in again. It didn't get through, and the sellers deserted again. So you can see this money flowing in and out in this volatile session, which is quite hard to read, and it certainly doesn't make for very trend-friendly behaviour. Not until we get a break out of this range. So the market's getting worried now after these big jumps up and down, and the volume's going off lighter a bit. We still have momentum, is still strong, and it's above the average, so there's a bias towards the upside. So we would love to see a break, but we'll wait till it happens, and we won't do anything until it happens. But it's an interesting stock, mineral resources. There's always lots of news about mineral resources. There's lots of great things about it, and a few negative things that have been happening recently. So it's an interesting stock, but worth watching. 65, 62 is the marker in the sand for me. Okay, the other stocks, a couple of other stocks I want to have a quick look at. Talked about the energy stocks. Airpol's just another one, or utility stock. This one is, in fact. It's just made a new high back here. Back here in April, 4th of April, we went through here. It's made a new high. Volume's been reasonable. Momentum's been great. The moving average has been great. So this is rating at trend intensity, rating of trend. Good buying demand. Confirmation comes when you get a new high in price, and usually you will get a rally. Odds on you will, and this is happening at the moment. So Ampol is still looking okay in that utility sector. The last one I want to have a look at is finally we've got a little bit of a hit on Atlas Arteria. We've been sitting here watching this one, and I actually did cover it last week because I was a bit frustrated by it, and you ought to be careful about being frustrated because you can do some silly things. But we've been patient and we have had faith. And what's ended up is that the market, it looks like IFM are making some sort of bid for this one, or they want to look at the books. So the price got up quite a lot yesterday. We've seen that it's all been a good setup because everything's been set for it. It was a rating of 10. It was above the average. Volume's been good. Momentum's been good. So it's been a great stock. And finally, we get a bit of benefit from it, okay? So there are stocks working for us. We don't have a lot of stocks, so we're not in a lot of the downtrending ones. It's certainly a struggle with some stocks, but we've done reasonably well considering, especially with our exposure in utilities and energy. Okay, so transport stocks we also looked at last week. They're starting to move a little bit. We've noticed a couple of them there starting to have a bit of a move off. Transurban's looking okay. Horizon's looking a bit better. So we're keeping an eye on that one. Utility stocks are strong. Okay, that's most of the one. Next week I'm going to have a look at Woodside. That's another energy stock which we just got out of recently. Bit of a failure there, but that's okay because these things happen. If the stock goes off, you've got to get out. But we may well be straight back into that one pretty quickly, depending on what happens at the end of the week. Okay, so that's the stocks I've got for today. I hope there's something in there for you. Now I want to go through my trading tactics, which is about helping you trying to understand the markets and get better at it. And today I'm talking about following the money, because really what price analysis is following the money. Where's the money going? If the price goes up on good volume, then you're looking for a trend to continue, okay? And we use other things to confirm that, but just a simple money flow in and out can give us a good signal, entry points, things like that. So let's just go through it. Price analysis' main purpose is to assess money flows. That's what we're trying to do all the time. It follows the change in money flows both in and out, and at the moment there's lots of good money flows going into energy and utilities, so that's where we directed our exposure at the moment. We're also always chasing it. What I mean is we're also always chasing money, so that's why it's a good lead to follow. Okay, if money's going into something, price will go up inevitably. A clue to driving trends is money flows. So when I look for a trend, I'm looking for money flows. Trend moves are then money managed. So as you know, nothing really changes from a trading perspective. It is still analysis in, and then it's money management out. Okay, so assessing and understanding money flows and trends is what I do, but I still behave the same way. Analysis in, money management out. Okay, let's have a look at Whitehaven Coal. I'm just going to blow this chart up a little bit so we can have a slightly better look at it. Okay, so what have we got here? Just talking about money flows, okay? So we've had an interesting situation with Whitehaven, which has been a very profitable stock, albeit a bit volatile. But if we look at what's happened here recently, the last two trades we've had, we entered this stock back in May of 21, when we saw a good little break up here, trend reversal, okay? And I'm getting the volume is picking up here, momentum picked up. Now this is a money flowing into the stock. So that gives us an idea that the price may well go higher, okay? And it does go higher. Volumes move around a bit. Volumes was quite strong here, then all of a sudden we see a whole lot of money starting to flow out and the price weakens off. So we stop out, get out, we take out 23% and move on. That's just watching the money flowing in and out. And then now, once this has happened, and this is the normal Stockradar strategy, once our stop goes off, the market can go down, it can go sideways, or it can go back up again. In this instance, it started to go down, it then went sideways and then decided it was going to go up again, and now we're starting to get this beautiful money flow back into this stock again and gives us a good hit. So we'd actually get an entry tool up here, but already we've got a 34%, 35% in the bank account already. This money flow gives it's a bit of a tip. It's just added information as to what's happening with the stock. And Whitehaven Coal can be quite volatile and dangerous, but we have done reasonably well. We've been on the right side of it. Trend intensity rating is 10, so you can see the first entry here. First stop goes off here, money management stop, also confirmed by money flowing out. And then we get a turnaround, we get a big money flow in, and up it goes to Whitehaven Coal. So that's just a bit about what you're looking for with the money flows, what we're trying to assess all the time. Okay, so that's Whitehaven. I talked about this before, analysis in, money management out. So there's no right or wrong in this situation. So whether you use money flows, whatever you use, there's no right or wrong. Fundamental technical is not right or wrong. It's whether you make money, because that's what you're trying to do, okay? So that's the ultimate test, the ultimate litmus test. Are you making money? If you use technicals, dartboard or fundamentals, doesn't matter as long as it works. That's how you do it. So increase your chances doing it. What I do this way, I look at money flows, I look at price analysis. Okay, so we look at Morley Parsons here. This is a build-up, a bit like what we're looking at in Treasury Wine Estates at the moment, a long time ago. Morley Parsons is a lot further down the track. So if we have a quick look at this Morley Parsons chart, which I know you've seen before, but I like to show it again because it is a beautiful classic long-term reversal pattern, which has now culminated in a new uptrend. So if I just put the whole picture in there for you, so you can see the old highs back up here, just above $21. Downtrend, then we start to get this pattern here, lows, a new high, a higher low. And this is where we start getting interested, okay? So we get our high low here, it breaks the average, it breaks the trend line, breaks the trigger point, so we've waited quite a bit of time to get confirmation, like we have with Horizon, like we will do with Treasury Wine Estate, and now it starts to move higher, and we can start to see, if I just squeeze up this big tick here, you can start to see the money flowing in here. You can also see the money flows here at the bottom of the market, which is a very good sign of a bottom when you get these big peaks. Okay, and you can see the money starting to flow in here. Just as we're getting our trend reversal, starts to move up, momentum's good, the average is good, so we're getting that trend intensity rating of 10. No matter what happens in the market, that's what I need to do. If that's the case for me, I have to buy that because that's what my system says. Okay, now this stock might go to $20, it might finish here and go back to 10. I don't know, but the odds are saying this is what's going to happen, this is where I've got to be. Okay, so that's Wally Parsons, which is so far so good, is working out okay. All right, now that's really all I've got for you today. There's plenty of stock news going on at the moment. There's a lot of stocks going down, as there will be today, but there are some great stocks going up, so be careful out there, and there are some money to make. As well as looking at investor behaviour on a chart, clear money flows shown in the volume patterns adds extra depth and foundation to our analysis. So that's what I'm trying to do. Just build that confidence, build that confirmation of what a price is going to do, what the odds are going to do. With this price and money flow structure available to us, we can easily build a simple decision-making process around it, which is what I've done. It's fun and a challenge building these rules around such a well-developed and understood basis for analysing stocks, which in the end provides a very solid foundation for any trading strategy. So I've been looking at this stuff since probably early 80s, and my knowledge has got bigger and bigger, but my confidence also in this form of analysis is quite high, and that's why I do what I do. So that's really all I've got for you today. Be careful out there, stay safe, watch your trends, heed your stops, and I'll see you all next weekend. Lots of luck.